While owning rental properties is lucrative, maintenance is key. These expenses ensure your property retains its value and appeals to quality tenants. But how do you predict costs like these? Welcome back, Loopers. I'm your host, Andrew Chung. If you're a landlord or property manager, understanding rental property maintenance expenses is crucial. In this video, we'll dive into managing these expenses effectively. Rental property maintenance expenses can be divided into two categories, fixed and variable. While fixed expenses are predictable, like landscaping, variable ones such as roof replacements might catch you off guard. Remember to factor in expenses related to tenant turnover, and keep in mind some restoration costs may not be covered by the tenant security deposit. Neglecting maintenance? The results are clear. Curb appeal goes down, and with it, your property's value and tenant attraction. Remember, your local laws or homeowners association may have guidelines for landscaping. Always plan and budget accordingly. Now, let's talk about common maintenance expenses. Repairs, landscaping, pest control, and HVAC maintenance, they're just a few examples of common expenses. Being proactive here not only saves you in the long run, but also keeps tenants happy. And don't forget about budgeting for other maintenance expenses like plumbing and electrical repairs, waste management, and cleaning. Estimating costs is vital. Always account for regular upkeep, seasonal expenses like snow removal, and appliances maintenance. But seasonal just doesn't mean winter or summer. Have your HVAC checked before each major season to avoid surprise breakdowns. And when it comes to appliances, remember, their lifespan varies. An AC used year-round might wear out faster than one used occasionally. Once you have routine and potentially unexpected maintenance costs in mind, it's time to make a budget. Establishing an emergency fund and handling tenant-related damage are essential steps in preparing for these expenses. Unexpected expenses, they're inevitable, but with a dedicated emergency fund, you can tackle them head-on. Just decide your saving goal, determine a monthly contribution, automate that transfer, and keep it separate. No more unexpected debt or dipping into personal savings. We've all had that heart-dropping moment discovering tenant-caused damage, but with clear documentation and knowledge of your lease agreement, you can navigate this smoothly. Remember, many times these repair costs can be covered from the tenant security deposit. Then there's tax implications. Did you know that certain maintenance expenses can offer tax deductions? By understanding the distinction between deductible repairs and long-term improvements, you can maximize your tax benefits. When in doubt, always consult with a tax professional. Meanwhile, estimating and tracking rental property maintenance costs is the key to budgeting. Familiarize yourself with guidelines like the 50% rule, 1% rule, or even the square footage rule to get started. These can be tailored to your property's unique characteristics. Also, it's important to stay organized. By keeping your business and personal accounts separate and using platforms like DoorLoop, expense tracking becomes a breeze. And if you have a property manager or accountant, DoorLoop's inclusive platform allows for collaborative access. By synchronizing your bank within the app and using DoorLoop's tools, your management process becomes streamlined. Proper planning, accurate budgeting, and efficient record-keeping through platforms like DoorLoop are your tickets to maximizing rental property potential. Want a deep dive into DoorLoop's accounting features? Schedule your free demo today and discover everything that DoorLoop has to offer. Click on the link in the description below. And here are some frequently asked questions. Number 1, what are maintenance expenses? Some examples of maintenance expenses include lawn care to plumbing and electrical repairs to roof repairs and even those pesky appliance replacements. Keeping up with these ensures your rental property stays in top shape for your tenants. Number 2, what falls under cleaning and maintenance expenses? Think of regular tasks, landscaping, cleaning inside and out, and garbage collection. These are essentials that should always be part of your budgeting game plan. Number 3, how do you calculate return on investment or ROI? With the 50% rule, 1% rule, or the square footage rule, you can quickly gauge the profitability of your rental property. Number 4, how do you calculate rental property maintenance costs? Just turn to our trusty rules again. For instance, the 1% rule suggests that for a $500,000 property, you're looking at about $5,000 yearly in maintenance. Number 5. How can you report rental income and expenses when it's tax time? Report your rental income and expenses on Form 1040 or 1040 SR, Schedule E, Part 1. And don't forget to account for those valuable repair deductions. And question number 6. How do you keep tabs on these expenses? Simple. Use a spreadsheet or a comprehensive tool like DoorLoop. With our platform, you'll always stay on top of your expenses. Well, that's it for this video. Make sure to subscribe and give this video a thumbs up so we can get this information to more real estate professionals. If you want to join a community with other real estate professionals, join our exclusive Facebook community with the link in the description. And to learn more about property management tips, click this playlist here. We'll see you there.